Wednesday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with John Fort, Sarah Eisen at Post 9 of the New York Stock Exchange. Joining us this morning, Menlo Ventures Managing Director and early Series investor Shawn Carolan and KeyBank Capital Equity Research Analyst Andy Hargreaves. Guys, good morning to you both. Our top story today is going to be Apple hitting all-time highs. The company, of course, beat on the top and the bottom lines last night, issuing stronger than expected guidance for the September quarter. Strong device shipments across the board, helping Apple deliver its best revenue growth in 7 quarters, John, with unit and revenue growth in all product categories, even some surprise ones.
Yeah, iPad, a big surprise. I was looking back for more than half of the iPad's life now, it has been in decline. So this performance up year over year at least sparks some hope that that might be shifting. But I'd want to see a couple more quarters before being confident of that. The two things that seem most significant to me off of this call were the low inventory levels now, the big sell-through that they had in this quarter, and then that aggressive guide into the start of what we expect to be an iPhone launch, given that so many people had expected the highest end iPhone to be delayed somewhat. What does this mean? Are we going to have more iPhone models out than we've had in the past, perhaps updated models? Why is Tim Cook so confident?
Yeah. Andy, all the buzz about it today and the optimism, I think you're going to probably keep some of that in check. Am I right?
Depends on what you want to hear, I guess. I don't want to put a wet towel on people, but I would say, there was good and bad. I think expectations were really, really low for the September quarter, and so that's some of what we're seeing is just relief that, yes, they are going to ship some new iPhones, that there is going to be a cycle coming. But I thought there was good and bad. John mentioned the inventory reduction. The bad side of that is, Apple anticipated a pause in demand in front of this new phone, and it doesn't seem like we're getting it, which says that, people still want to buy iPhones, which is great, but it also says that they don't care enough about the new one to wait a few months.
Yes, but explain this valuation. We talk about how ginormous it's gotten, $800 billion company. It's still trading less than 18 times earnings. That's less than the overall market. It's a big discount to the overall technology sector and even the consumer staples sector. So how is that justified given a quarter like this and the outlook that Apple just provided?
Well, I think you have to take a step back and look at the multi-year outlook. And, over the last couple of years, we've grown profit not at all, zero. And if you look at, iPhone still generating over 65% of the gross profit, that is a saturated market at the high end. And yes, they're growing services, but you've had declines in other businesses. And if you're looking forward, I think it's really hard to get growth rates that are, anything more than maybe mid-single digit. And so from that perspective, when you're comping it to other technology companies, even big ones, Google, Facebook, those companies are growing extremely fast. And I think it's really hard to argue that Apple should be worth anything close to them.
Shawn, when you look at Apple's services business and the fact that I think it was Tim Cook who pointed out on the call, payments capability has recently accelerated in international markets, and that's a big part of what's driving it. How important do you think that business is to investors, given, the iPhone is pretty much what seems to be driving this story?
Yeah, the services, as you know, the hardware markets are tough, and there's always margins and inventory and a lot of things to deal with. The things that people love about services, of course, are these margins, and I think they're up to 185 million subscriptions, I believe, of people, subscribing to apps, and they're just collecting a toll. They don't really have any cost of goods on that. So I think it's quite important. They never really figured out ads, and that's where you see a lot of the growth of Facebook and Google. So I think it's important, but there needs to be more.
Obviously, we're talking about phone cycles, but there's a longer-term story in augmented reality, which Tim Cook did address on the earnings call last night. Take a listen to this.
We believe AR has broad mainstream applicability across education, entertainment, interactive gaming, enterprise, and categories we probably haven't even thought of. With hundreds of millions of people actively using iPhone and iPad today, iOS will become the world's biggest augmented reality platform as soon as iOS 11 ships.
All right, so categories we haven't even thought of, he says, Andy. Does that get you above your 12-month target of 150?
Well, I guess if I haven't thought of it, then by definition, it's not something that's included in my numbers. You know, it has to be something that I haven't thought of and that I actually want. And that's the trick with augmented reality, is there's a lot of things you can think of. I haven't seen any that would make me go out and buy a new phone yet. Now, I'm not as big into Pokemon as a lot of people are, and that was a massive fad that drove real volume in sales, app sales, certainly. So there is something there. I believe that there is, you know, some change in the technology platform that's going to come with this that's going to be positive. I just don't know how to quantify it.
Shawn, my take is that people are perhaps putting too much into augmented reality, too much stock in that too soon. Might be big down the line, but you've got to really develop a developer community. It's not going to be Apple itself that turns this into a huge business. It's going to be third-party developers, and it's going to take them time once they get this hardware, once people get the hardware in their hands, to figure out exactly how to build a business around it. I mean, isn't this really more than 12 months out, Shawn?
Actually, you know, if the developers and their buzz is any indicator, they're actually quite excited about ARKit. I was a little bit skeptical on my last time on the show, but have checked in with a bunch of them. And even the current devices, you think of an iPad, iPhone, they have a camera and they have a screen. And the current iOS 11 SDK lets you essentially move around it with pretty high degree of precision and see a virtual item sitting there. So the existing hardware is actually quite capable of it. I've been looking at some of the, you know, the leaked drawings to see what on that hardware might make it better. But, you know, there's a current base. The question is, what is the killer app? You know, will the Pokemon Go type of apps where people can use for education and other things, you know, provide more use cases that people are willing to spend money on content?
Yeah, that was sort of a fad. Andy, just back to the financials for a moment. Wanted to bring up the cash war chest of $261.5 billion. How should investors be thinking of that? I've heard all sorts of things, from grand ambitions to buy Tesla, to if we get some sort of repatriation deal, a game changer. What are you telling people?
Well, I do think you have to have repatriation to make it a game changer, right? Because the vast majority of that, $246 billion, I think, is offshore. And so if you want to use it for repurchases, one-time dividends, jacked up dividends on an ongoing basis, big purchases of other companies, it has to come back. And they don't seem likely to bring it back unless they get the tax holiday. So if we get that, then, you know, maybe we can think about bigger M&A. I think about it just as a cushion for the valuation. It's always there. Worst case scenario, you have to pay a little bit of tax, and it helps you out.
Finally, Andy, you got a sector weight on the stock. Some viewers ask, you know, is Andy serious? You've been, I would say, net skeptical for a while now. What are your favorites, if not this one?
Yeah, well, I try to be less serious than a lot of people in my position, but I'm deadly serious. I'm deadly serious about the stocks, though. Our favorite names still right now are Google and Facebook. And it comes back a little bit to what we were talking about earlier. When you look across the landscape, you gotta sort of weigh growth versus the valuations that we're paying. I look at Apple, and I think it's a multi-year, you know, sort of GDP type of grower, and those other companies are obviously growing very, very, very much faster than that. And I think the price that you have to pay for them is much more attractive for the growth you get.
Andy Hargreaves and Shawn Carolan. Guys, thanks very much. A big day, obviously, for earnings with Apple now in the can.